Anderson. I like Anderson. This is kind of a mutual market for Mike and I, but I'm going to take the reins here. But Anderson, I like this for the kind of the reasons that I was indicating when we were over on the Noblesville market report. I mean, I think this is a great area to be paying attention to. And the last time we covered Anderson, I kind of shared those exact same feelings. Even so much that I think I'm going to try and talk Mike into making this part of our normal market report, month over month market report updates, so that we can track that data and how this grows. There's the calls I take every day from new investors. They're looking at Anderson and for expected reasons, right? I mean, we're going to jump right all the way over to, we're going to skip the median rental price over time. It's ticking up. It ticks down $50 from March as our sneak preview. I'm not overly concerned about that right now. I want to get a handle on the market. The average sales price, I mean, look at that. Is there even a home that sells for over $500,000 in Anderson? I don't know. This might actually be the average sales price in Anderson, right?
Maybe an apartment complex.
Yeah, exactly. Maybe an apartment complex. But with the way that Indianapolis is expanding its circumference, its coverage, and the suburb areas, Anderson is being brought right into the fold, which tells me or leads me to believe that there's going to be a tremendous appreciation play. There's going to be also Anderson University is there, right? And I'll have to look into and see what kind of growth that they're kind of projecting as well. I want to see what they're doing as far as their programs, if they're trying to develop those, because that'll obviously kind of correlate to the demand in this market. But your average rents at $921, which is lower than I would prefer if I'm getting into a market, but I think it easily obviously correlates almost to your 1% rule, closely to your 1% rule, is your average sales price, which, I mean, you don't see that anymore, that's for sure.
It's certainly a lot closer than you're going to find in Fishers, Noblesville, Westfield, by far, for sure. And that's why it's this emerging market. But I mean, I think that's also why people are attracted to this market, because I mean, what is that closest to? Probably Noblesville in terms of what we report. And what was the average rent? $1,800 in Noblesville. So I mean, you're literally half. So if you're looking for affordable housing in that area, it's an extra 15-minute drive, something like that. But to save half on your monthly rent, that's attractive. And to be able to pick up a home at $150 as an investor, that's also super, super attractive. So, I mean, affordability, in my opinion, is the name of the game in Anderson. And just to speak a little bit, you kind of said, well, what's going on with their economy? I haven't done a ton of research. This is a little anecdotal, but I think that the demand that we're seeing in Anderson is just from the Indy market spreading out and sprawling into the Anderson market. I mean, Anderson had a tough go of it. I don't know how long ago it was at this point, but when the Chrysler factory, some factory shut down. So they kind of been a little bit depressed in terms of the economy. And so I don't think we're seeing anything organic yet come out of the Anderson economy per se, but that's okay because Indy is pushing that way. So I'm not looking to Anderson to generate jobs, or I mean, I don't see anything like that on the horizon yet. But that's a possibility. And I think, going back to your dreaming music, I can see where that average sales price goes from 150 to 2 to 250 to 3 in the next 3, 5, 10 years. So I'm like an Anderson.
Yeah, very well said. Exactly. I think it was GM. I think that went under.
GM.
Yeah. So I know exactly what you're saying. And yes, and I love kind of your theory there that Indianapolis job market is going to play into the Anderson market. And again, I want to get a grip on what Anderson University is doing there. And if that continues to grow right along with it, wow, man, the potential here. And Noblesville, I think, is the closest market as it relates to Anderson. And as we know, Noblesville rather is expanding like crazy, and it is inevitable, in my opinion. It's a strong theory, but inevitable that it's going to bleed into the Anderson market. I'm going to keep an eye on this. One thing I'm doing now is I'm pulling new properties that come onto the market, the sales market, and I'm running those. I'm trying to correlate with the current market rent price. So that's something I'm in tune with almost on a daily basis right now. And Anderson is where I'm consistently still finding anything that's even close to the 1% rule that I mentioned ago. So there's a lot of good potential there. A lot of properties that we're pushing towards to investors right now. So if you're new to this market, stay tuned. Anderson is probably where we are going to be touting pretty heavily over the coming month.
Yeah, if you're looking for affordability and a little bit of I don't know the right word, but looking to have maybe a little bit of a riskier play, not risky, but it's not like you're speculating just a little bit. You know what I mean? Like it's coming. You can feel that it's coming. Whereas in the other markets that we work in, Westfield, Fishers, Noblesville, I mean, those are so safe. They're not going anywhere. You're not going to see any sort of huge price dip or anything like that. So it's like it's coming. It's a little bit speculative, but I think that the payoff is going to be there. If again, and I've said this a couple times, but I think it warrants to say it again. I think in real estate, you have to have a longer time horizon that you're looking at things. If you're worried about this quarter or this year, you're never going to be successful in real estate investing. You need to be worried about 3, 5, 10 years down the road. Yeah. What does this investment look like? And to me, this plays into that 5 to 10 year thing where in 5 to 10 years, we're talking about this is the new Noblesville. This is the new Westfield.
Yeah, I certainly could see that as a possibility without a doubt. Yeah. All right. Well, stay tuned. Let's see. Well, let's not leave off this graph here. Active homes, which is a little bit of short on data here, short on data points, but as you can see, limited data next to last year, 2023. We're looking at 102 active homes in the market, which we don't have our active homes in the market for this month. Although I think that was kind of left out. Didn't you kind of track that down?
That was totally my fault. I just, for some reason, missed that. I'll tell you right now, it's 126 is what it is.
Okay. So you have more active homes. Man, I would love to track this. I can't wait to track this and see where it goes. And so our average rents, let me also just mention this because I didn't go over it box by box like I typically do when I cover these. But I mean, your average rents are up 5% from the previous year, up 2.3% from the prior month. I mean, those are solid numbers. So although like Mike was indicating there, a little bit, I don't even know if risk is the right word, right? You're going to be able to see it in this market.
Yeah, it's not.
Yeah. The only huge advantage that we're potentially theorizing or projecting here is that you could see an even more glamorous return on this potential investment. Okay. Yep. All right, days on market, looks like we're correlating pretty close to the previous year. Stay tuned on some of this data as we try to include this on a month-to-month basis, and this will be fascinating to track. I'll be shocked if it doesn't quickly excite me the way Noblesville does.
For sure.
Okay.
For sure. Yeah, let's start tracking this on a monthly basis. I think this is up and coming, and I think we got to start tracking Anderson for sure.
Nice. Well, that concludes the markets that we got to track this month. Anything else you've got to add? I kind of like this setup. I think this looks good. I like the way it's recording. We've even got some sounds we're going to play with. I'm going to get a little creative with as time goes on. So hopefully I don't annoy our viewers, but I like this. I love it.
I tell you, it's getting warm. I'm getting super excited for leasing season. Man, it's going to be great. I'm thinking this year might normalize a little bit in terms of the data, but I'm just getting excited for leasing season. I'm just getting excited for it to be warm.
Yeah. And I got to tell you, I mean, just talking about all these markets and kind of what we're currently seeing, I would imagine we're going to see a lot of these owners that aren't going to want to sacrifice their 2.5% interest rates, and that are, I mean, this is a great option for you guys to really be looking at on what else can I do with my property? I'm moving, but gosh, I got 2.5% interest, which I'm convinced we may never see again. Don't let it go. Put it on the rental market. And also, I've got to mention this as well, and this has got to be clipped for a later or a nice little reel on Facebook. But if you're looking for, you need to follow my advice there. You've got to put your team together. If you're a new investor to the area, you've got to find a realtor to work with, and you need a property management company to bounce off a rental analysis and use that information as you're acquiring new properties. And if you don't have a realtor that you're already working with here in the Indianapolis or surrounding suburbs, reach out. I'll be happy to connect you with an agent that works with other investors currently within our portfolio. But we have all that information. So reach out. I'll be happy to connect you, get your team together, and get you moving a lot faster than you would otherwise. So make sure that you take that serious.
Yep, agree. And it's important to find the right realtor to work with, because not everybody understands from an investor's point of view, what they're looking for, return, that 1% rule. You know, some people know what that is, some people don't know what that is. So it's important to find the right agent who kind of understands it from an investor's point of view.
And you're absolutely right. And as we start to close out here, I've got to mention one other story, because you're absolutely right. It's important that you find the right agent. And this speaks to even more. And I'll try to control my excitement here, but it's a little shocking. I spoke to a new investor the other day. She was under contract to buy 2 properties, was working with a real estate agent, and just so happens that we were managing the property that she was under contract. We weren't managing at the time. It was one that we previously managed several months prior, but and she was under contract to purchase this property, reached out to me for management services and kind of ran by the property addresses. Anyway, long story short, the property that she was looking to acquire, she was under the impression that that property was going to rent for $1,600 a month. And that was a red flag to me, knowing that we had previously managed the property just a few months prior, where the property was only renting for $900. Well, she had a lease and everything that apparently proved, and I just had to caution her. And to me, that's something that the realtor should be able to catch. If the realtor's not catching that, you've got to be reaching out to a property management company who's going to have experience in the rental rates before you acquire a property. She almost made a drastic mistake, in my opinion, and could have ended up losing a significant amount of money. So anyway, you've got to put your team together.
Yeah. Don't believe what you read. Don't believe those pro formas or the rental estimates that people send you. Do your due diligence. Reach out to a property manager and check all those boxes.
Exactly. All right, Mike, this was awesome.
Let's do
Thanks for jumping in here. Like, subscribe, do all the things. Share our stuff. Let us know how we can improve these podcasts going forward. Let us know what you think of this new streaming platform. So far, I got to tell you, I'm kind of liking it. I've only played one Daydreaming soundtrack. I
can't believe you contained yourself to only one.
Yeah, exactly. I know, it's tough. I know. I was really just kind of zoned into the data one. So this is cool. We'll see.
Awesome.
All right, check out our other videos.
All right.
Red Door Property Management. Like and subscribe. We'll catch you guys later.
See you next month.